Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. And in today's video, I want to show you how to enter a diagonal call spread inside of your Thinkorswim platform. So again, this video is mainly for the logistics and the mechanics behind how to enter these trades, what to click on, etc. Not necessarily about when we should enter them, how we should price them, or market situations that we should use them. So inside of your Thinkorswim platform, again, you're going to be working inside of the trade tab on the top. And then under all products, you're going to type in the ticker symbol of whatever you want to trade. In this case, we're looking at SPY. Now remember, a diagonal call spread is basically the combined marriage of a call calendar and a short call credit spread, or commonly referred to as a bear call spread. So I'm going to show you guys what that looks like on here so you can see and then just visually think about it, how you want to be building these out. So remember that a calendar spread is selling the front month. So we're going to sell the front month with a diagonal spread as well. So we're selling the front month and we are buying the back month options. Now in a call calendar spread, just a regular one, we would sell, for example, the 235 calls and buy the 235 calls in the back month. So we're doing the same contracts. With a diagonal spread, instead of doing the same contract in the back month, the 235s, we are going to do instead a contract that is higher in strike price. So I'll say that again. Instead of doing the same contracts that we're going to buy in the back month, so the 235 calls, we're going to do a contract that's higher in strike price. So this is where we get that 235, 236 call spread type setup, where we have a spread between the different strike prices. So that's the way that I think about it. Is I think about it as doing a spread, just doing it over two different contract months, which is basically what a diagonal does. So in this case, we are going to sell the 235 call in April, and then we're going to buy the 236 call in May. Now we could buy something a little bit further out. I'm just doing it one strike wide. You can do it a little bit wider if you want to. The easy way to do this, or the first way to do this, not necessarily the easy way to do this, is to right click on the options that you want to sell for the April contract and go over to buy and then down to diagonal. And so you're going to buy this diagonal here, and that is going to, again, default to selling the April contracts, which is exactly what we want. Now, the problem with doing this is that the next options that you buy are going to be the 240 calls in the weekly expiration, which is the 26th April 2017. We do not want to trade the weekly options, right? We want to trade something different out in May. So when you do this, you have to manually go in here and change the contract month here to the May contracts. So I just manually changed it here so that we're dealing with the May contracts. And then what we also have to do is manually change the strike price to the 236 as well. Okay, so it's a little bit kind of like convoluted here, but you have to change this top side here, these options that you're buying, because the system just naturally defaults to the next available contract out. So it could be the weeklies, could be the monthlies, and the next strike up for that time period. So when you do this though, you get this debit of $95. Obviously you can hit confirm and send. What I like to do instead is I like to show both contract months like this. You can usually narrow it down by 4 or 6 strikes just to show kind of a narrow window if you want to. And I like to manually click on the different strike prices. So in this case, I would hold control down on your Mac or PC, it doesn't matter, and click on the bid price for the 235 calls. So we're going to sell those, and then we're going to buy, again, holding down the control key, we're going to buy the 236 calls in the May contracts or the back month. And so now you can see that it creates the exact same order. It's just a lot easier to do versus having to change the months and get confused on the strike prices. And it comes up with exactly the same price as before. So that's the easy way to do the call calendar or the call diagonal spread. So as always, hopefully you guys enjoy these videos. If you have any comments or feedback, please let me know. Ask them in the comment section right below. If you like this video, thought it was helpful at all, please consider sharing it online for us. Help spreading the word about what we're trying to do here at Option Alpha. And until next time, happy trading.